Good morning. This is Larry McMillan with a stock market update on Monday, April 14th. So the market finally seemed to have bottomed out to a certain extent last week. We did a webinar updating our subscribers on the current market on Saturday. And basically, the market, we only have one buy signal been confirmed so far. That's the VIX spike peak buy signal. But the market is very oversold. And so as it continues to move higher here, we're probably going to get more buy signals along the way. However, the basic trend is still down in the S&P 500 chart. And so that's our main indicator, the S&P 500 chart. And until this pattern of lower highs and lower lows is broken, there is still bearishness in this market. A close above 5,800 by S&P would be a break of that trend and would be quite bullish. Meanwhile, this rally, which seems pretty strong right now, is just an oversold rally, and it's going to have a target, well, at least of the 50-day moving average, which is around 55.50. I'm sorry, that's the 20-day moving average. But it could extend all the way up to the 200-day moving average, which is around 57.50. That 200-day moving average has rolled over and is pointing down now, so that's another bearish factor. So while this rally may produce more short-term gains, there are still some questions about what happens going forward. But I think our indicators will adjust as needed. The equity-only put-call ratios are split. The standard ratio is still on a sell signal, and the weighted ratio is on a buy signal. So we want to see both those together, agreeing before we act on it. Breadth has been very negative. Obviously, it was positive on last Wednesday and Friday, but it had been so negative before that wasn't enough to generate buy signals. So it's going to take at least another couple of days to generate a buy signal from the breadth oscillators, even if advances outnumber declines. The number of new lows on the New York Stock Exchange continues to outnumber the new highs, so that indicator remains bearish. VIX has been pretty interesting. It went up to 60 and fell back, so that gave us, as I said, the one confirmed buy signal that we have, which is a VIX spike peak buy signal. The trend of VIX is still higher, though, so that's not good for stocks in general, although VIX is way above its 200-day moving average, and that's the only thing that would reverse that trend. So it's important in this case, with that sell signal in the trend of VIX, to take partial profits when you get deeply in the money options. The construct of volatility derivatives has remained quite bearish, and it's still bearish as I'm recording this. And that's a little disconcerting. In other words, the term structure of the VIX futures and of the CBOE volatility indices, those are sloping downwards, and that's not good. That's usually a pretty negative sign. And the fact that it hasn't relieved yet is a bit worrisome. But who knows, in the next couple of days, those things could change. Right now, VIX itself is trading above the 3-month VIX. If those were to reverse and VIX went below, then that would be a short-term buy signal. So that's something to keep your eye on in the short term. So meanwhile, we're still holding a core bearish position because of the negative S&P chart. But we will trade any confirmed signals that come along, buy signals or sell signals. The next ones are probably all going to be buy signals because we're so oversold at the current time. Meanwhile, since things are moving so fast, I invite you to visit our website and take a look at our daily letters where we keep up to date on these things in a timely manner. Meanwhile, have a great week trading and enjoy the upcoming 3-day Easter holiday weekend.